Good morning, everybody. Mike Vacchi, Princetontrader.com here with your Thursday market webcast. All right, daily chart, that out of the way. We were in this very long trading zone, little bit below, little bit above. Here we go. Bulls tried to break it out over the course of 3 days, but the reality is the news of the debt ceiling and everything is just weighing too much on the tape. They took it up as high as 42.25, tried to initiate a little bit of a band ride, but it wasn't sustainable. They brought it back into the 50. Now, the other thing that we have seen that is not sustainable is the ability of the bears to trade below the 50-day exponential moving average. Nope, 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 and nope. And that goes back to March. So we haven't really spent any meaningful time below the 50-day EMA since back here on March the 9th. And right now, the tape is getting pulled in either direction, depending on the latest headline with regard to the debt ceiling. So until you get some resolution there, some kind of a deal, or things fall apart, it's going to be very difficult to get any type of price commitment in one direction or the other, and that just tends to just want to gravitate into the daily mid-band there, the 20-day. So we'll see. Right now, let me go to the hourly chart. So for example, this little lift right here in the 8 o'clock hour from 52 up to about 61 or 62 to make a new overnight high, that was just a little headline on the wires about McCarthy and the progress of debt talks. So this is exactly what I'm talking about. So this is the kind of tape that we have dubbed over the course of the last 10, 12 years something called a headline minefield. It is. It's a headline minefield. So headlines tend to come out, they pop. If they prove to be untrue, then you see things wind itself back to the area of the original lift or drop. We saw that a couple days ago with that fake photo of the Pentagon that dumped it and then they rolled it back up. We saw it yesterday at about 2 in the afternoon with little lifts and pops related to the debt talks. And then right after the close, they launched it up into as high as 57. Actually, it was more. No, it was this one here, 51. And these things tend to wind themselves back when if there's no if there's nothing behind the rumor. Okay, this tape is jumping at every rumor it can, because it literally has nothing else to do. So you can see here on the hourly chart, it was a nice 100-handle move in from 27.25. It spent hours trying to deal with the 50-day. I ended up with a runner that I got 12 handles on that I could have got a lot more on, because I really was giving the bears a chance to deal with the 50. And that was for the reasons we talked about a couple of minutes ago. If they convert that 50, which they haven't done since March 9th, you had some room to the downside. And you still do if they can get back there. But understand, if they make a deal on the debt, they're going to pop the news. Whether they fade that back or not remains to be seen, but the initial reaction will be to the upside. I'm not going out on a limb on that one. So what do the bulls want to do today? They want to take out the 9-day. The 9-day held it in yesterday. They want to take out the 9-day, try to get up into weekly pivot if they can. The bears want to break this low from last night's open, 41.31.5, and try to break 14 down here. Just like they did a really good job the other day of breaking 41.20. Okay. So where do the numbers come in? You got hourly mid-band 41.42.25, volume weighted average price 48. Then you've got a whole bunch of longer term stuff. You got the pre-FOMC price at 49.5. Our proprietary moving average, the 5-minute mid-band, and monthly pivot all lock up basically at 53. Then you have the ultimate delineator of a bull-bear line, the hourly mid, sitting at 54. So just a truckload of inflection points between 42 and 54. That's going to be the battleground. It's what they're trying to break out from right now as we print 64. But that's a news-based pop based on the debt ceiling. So little object lesson here while we talk. All right, that's all I got. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. I'll be back tomorrow with another webcast. I'll talk to you then. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.